Hey everyone. Today I kind of surprised Brett by saying he's going to be on a podcast today.
Yep, I
He's all
shaved.
mad at me.
Yep, wore my nice clothes and everything.
You look great, man.
Well, I mean, I always look this good, but I like to put a little bit of effort. But it is what it is. What'd you drag me in here for?
Well, to be honest, the reason why I wanted to have this podcast or this, episode was there's a lot of uncertainty in the market, right?
Yeah.
There's a lot of people, there's a lot of fear mongering, there's a lot of other things going
Right.
on, and I'm guilty of it myself. We see and learn a lot what's going on, but people that are not in the actual industry, what are they getting?
Right. Well, they're getting. Oh God, interest rates are going up, and that means I can't afford a house right now.
Right.
That's the growing consensus. That's what we've been seeing when it comes to mortgage applications. That's the word on the street.
Correct. Cascading fear, like
Yes.
all of this stuff that's happening.
Recession.
And education too. So, we saw lowest rates in history for 18 months.
Yeah.
Refinanced the majority of the market. There's many, many people that never took advantage of it, and now they're probably kicking themselves.
Oh, absolutely. They are 100%
Right?
kicking themselves. And if you're not, you should. You'll never see 2% interest rates again. That's my bet.
Right. If you do, then we have some major problems.
Yeah, then it's
that.
it's bad.
I think they're going to learn from what took place during COVID and all this, and we're sometimes victims of our own making.
Right.
They lowered the rates so far, gave so much money out there, so many different programs, and kept people out of work but gave people money, and now it's coming back to bite us, right?
Right.
So credit card debt's gone up.
Car
'cause people
repossessions.
right? The car prices have gone, doubled, all this stuff. So there's a lot of fear. And this isn't what it's supposed to be today. It's not about fear. It's about how are we going to navigate the waters? How are we going to, if I'm going to buy a home today, what do we do?
Right.
Right? If I buy a home today, what happens in 6 months if, for some reason, some of the fear mongering that says we're going to lose 20% in value? Right?
Sure.
What happens then? And, the people that went through '08 with a home that just purchased, and, if you didn't lose your job and you just kept making your payments, you made it through it.
You
right?
made it through. Yeah.
Right. I mean, the value came down, but it also went back up, and then it went up even more. So I know people today that bought a home in '07, '06,
Sure.
and now they owe $100,000 on their house, $150,000, and they might have refinanced it and done other things, and their house is worth $400,000, and they bought it at $300,000.
Right.
But at one time it was worth $220,000.
Sure. Well, and I think, but I think that's something. So, mind check here. When you buy a house, yeah, you're buying some place for your family to live.
Right.
That's all well and good. That's the social. That's the feel good inside. On the other side too, without getting emotional about this house, it is an asset. It is going to appreciate and depreciate just like everything else. A house that is built today is not going to be worth the same 10 years from now just because it's a 10-year-old house,
Right.
right? But still, we're seeing values still go up in other ways, right? Whether it's the neighborhood, whether it's inventory available, I mean, it's the fear of seeing things go down 20%. I guess this is my long view on it. I bought my house back in 2020, and right now it's probably worth the same amount of money as when I bought it. Does it keep me up at night? No,
Right.
because I'm not planning on selling it. And when I do plan on selling it, it might probably be 10 years from now.
Right.
At 10 years from now, I'm going to have so much equity in that house. And I'm going to go ahead and, as a betting man, I'm going to go ahead and say that it's going to gain in value 10 years from now.
100%. I mean, it is what it is. We're going to go through a period of time, unstable times. It is what it is. There is, every time you turn on the news right now, whether it's 5 o'clock news or whatever station they're talking about interest rates today. The highest they've been in so long, in how many years.
Right.
And again, that's putting that fear factor in, which is slowing down the process. Now there's more homes on the market sitting
Sure.
longer. The big investors, they stopped buying
Right.
which is good because they don't know what's going to happen,
Mm-hmm.
right? But what are they sitting on? They're sitting on tons of cash.
Oh, sure.
So, this drop 20%, you might see 2 years later you're 20% right back because guess what? These investors are going back after those houses because they're sitting on billions of dollars. I mean, we're talking like the BlackRocks.
Yeah. The BlackRocks. Yeah. Billions, trillions. I mean, right?
Right.
You know.
Right.
And I mean, honestly, if it does come back into where the market is, I mean, what a time to go in and start buying things when prices are lower.
Right.
I mean, that's what I would do.
Assets, man. It's there's a lot of talk out there too. It's like, hey, buy gold, buy silver.
Sure.
Because we don't know what the dollar is going to do. We don't know what the stock market's going to do. Like a lot of this, and sitting in cash. So that's all great. But what if that first time home buyer that is lease is coming up? Let's say they have a winter lease. A lot of people
Sure.
don't, but a lot of people, if
Right.
it comes up in the winter, what are they going to do right now, right? So, rates are higher, but they also know that lease is going to be higher as well. So, I mean, it's all in relation.
Yeah. I mean, just because home prices are going down and interest rates are going up doesn't mean that rent is going to be going down.
We always talk about what is the interest rate on a lease.
It's 100%.
Right.
It's 100%.
You are definitely not gaining any equity, right?
Yes.
So, making it your own and doing this, and the term has come up a lot. It's gained a lot of traction. I heard it first. I don't know, a couple months ago. You can marry your home, but
Date your loan or date
Yes.
your rate.
date your rate.
Date
right?
your rate.
And I think that's going to be very true. I think the rates are going to go up. It's going to curb inflation because it's going to come down. That people will stop buying or having that ability to buy. So it's going to, but it takes a long time for that process to happen.
It does. It does. I mean, depending on who you listen to, the Fed wants to get back down to 2% inflation, right? How long is that going to take?
2%?
They want to get down to 2% inflation.
I don't think they know what they're doing.
Well, of course they don't. Of course
That's
they
why
don't.
we're in this position in the
Exactly.
first
If they knew what they were doing, then we wouldn't be in this position in the first place. But I guess really, how do you go from what 8-9% down to 2%, and then how fast can you do it?
Right. So ripping the Band-Aid off, doing this, or they talk about a slight recession.
They talk.
we
about-
already know that's not the case.
Right.
We've been in a recession 2 quarters. They changed the terms on it, but
They
it
did.
is what it is. I don't want to go down that rabbit hole too far, but we see it in our industry. And one of the reasons why I wanted to have this, we talked about it earlier, is like I don't think a lot of people understand what truly is like all takes place in a mortgage.
Oh
right?
yeah, what is a mortgage, Brandon?
Okay.
I come to you and I say I would like a home loan. Will you give me some money? And that's how it works, right?
Where does the money come from?
Well, I thought you just had it.
Right.
Oh, you don't just have it?
No, I don't. I have to get it from our warehouse line. Our warehouse has to have this.
So wait, banks have warehouses?
Yeah, a bunch of cash stacked in there.
Just
right?
cash just stacked in there. You need some, you go and grab it, right?
Right. And then you pay money on that cash that you have in there. So you have many, many mortgage companies out there, right?
Mm-hmm.
So, we work for a correspondent lender. We're not a bank. You can't
Right.
deposit money with us.
We're a non-depositionary bank.
Correct.
Right.
Right. We're a correspondent, so we work with all the investors, which are your servicers, banks, right? The U.S. banks, Banks of America, Wells Fargo's that hold the actual loans.
Gotcha.
They sell them off to each other. All these loans that get packaged up into bonds and securities and so
Right.
forth.
Why would it's just for the folks that don't know a lot about that, why would they sell them to each other?
Well, they're moving money around, right? So they're going to package up all these good loans, and they're going to say, here, you buy these loans for us from this, and then you service them, or sometimes I'll service them. You just buy them from us and put them on your balance sheet, right?
Right. And so they're going to make some money off
Right.
of it still.
Right. So they have their duties to their shareholders, and they're trying to free up some cash so they can put it in other places. because it's not an unlimited supply of cash. No. Government seems to think so.
Well, I
Print a
mean,
little bit,
yeah, just
print some more,
printing press goes brrr.
right?
Right.
But I mean, that's truly how it is, and what we are going to go through, and what a lot of people don't understand, and part of this, major part of this conversation is when we are locking a loan in for a client, right?
Mm-hmm.
And then all of a sudden they come back and say, hey, this bank down in Oklahoma is going to give it to me for a half a point less. And it's a bank you've never even heard of, right?
Right.
And it's like, okay, so realistically, number one, how good are they?
Right.
I get it's a half a point, but
Yeah,
are
that
you
could
going
be
to
huge.
get to closing on time, right?
Right.
There's a reason why, it's like gas prices, from station to station. They're generally very close to each other. So when you find this one off that's a half a point lower than the rest of the market, there's got to be some concerns there. You got to have, because a lot of people just don't understand how it works, right? There's a
Right.
lot that goes into completing a loan. The lending costs have doubled because over recent years because of all that goes into it. The
Right.
compliance piece from technology to just how many people actually touch a loan.
Right. And when you say lending cost, you mean how much it costs us to be able to borrow the borrower to the borrower.
Correct.
Right.
Absolutely. That's exactly what it is. How much does it cost us to do the loan for them, right?
Right.
And we still have to make money.
And we still have to make money
Right.
on it. Right.
Every bank, every lender, correspondent, broker has to be able to make money, right?
Mm-hmm.
So what you're seeing in 2022, 2020, 2021, yes, a lot of fat cats got out there, it's easy money.
Easy
all
refinances.
These, correct. But leading up to that, 18, 19 wasn't fantastic years. In fact, a lot of companies were on the verge of hey, we don't know if we're going to be able to stay open in 2020. Boom, COVID happens and refi, boom, money everywhere. Right? So it was easy to make money then, and now it's coming to fruition, right? So,
right. Now we have no refinances and we have lower purchases.
and we have what we just talked about was fear in the market, right? So you put all that together, and here you are having people I don't know if I should buy a home right now. I'm going to keep renting. $2,200 a month rent. How much is that going out, right?
Right. So I'm sorry. I think I got us off track. How does everything that we just talked about relate back to the bank in Oklahoma that is going to be
Thank
giving
you for bringing us full circle.
Yeah,
back, 'cause
have
we did
have
get
a
off that
percent.
track. I had a point on that, and the point is, the fourth quarter is going to happen. We're just closed out the third quarter, and these warehouse lines are looking at these lenders, and they're looking at year over year. Okay, you did this last year. You were focused on refinance. You didn't focus anything on purchase business, and now you're relying only on purchase business. At 99% of it purchase, nobody's refinancing at these high rates today because they likely have a lower rate to begin with.
Right.
And now what are they going to do? And they're watching their people are cutting their staffs, laying people off, and they're watching quarter over quarter get worse, right? And then they're like, well, we have to have liquidity. Your cost is too much. We're going to wipe out your warehouse line. Now, as a bank or lender, you may not have any money to give that person.
So you're just done.
What do you do?
Yep. But, well,
It's
what do
shut
you
off
do?
overnight.
Overnight, I
Right.
can't make loans anymore. Well, at that point, I'd say I go out
And
of
you
business.
already have all these people that are under contract, right? And
Oh
they're supposed to
my
close
God.
next week or tomorrow. What happens, right? It's so when you're seeing some of these drastic signs,
Like a half a-
that should be kind of a red flag, and you might want to have a backup
Right.
in case something happens.
And just so folks are clear, because I was thinking about this and I was trying to think, well, Brandon, no, you're wrong. Look, guys, for the most part, I'm going to go ahead and say for 97% of everybody out there, we all get our money from the same place. It's all coming from the same warehouses. It's all coming from,
Right.
Federal Reserve. It's not like, oh, this bank has a secret deal with this warehouser over here.
Right.
No. It's it all pretty much comes from the same place.
Right. So, there's going to be a lot of companies in first quarter of 2023, you're going to see 20 to 30% of lenders gone.
Just
Or merged,
disappear.
bought out by other companies.
Sure.
That may have played the game smarter. Maybe a depository bank, like, here, I'm going to buy up these branches and we're going to change the names on them. We're going to do this, put this in place. That is going to happen.
Mm-hmm.
But there is a real factor that is going to come into that, and where people were literally going to be like scrambling last minute to try to find a different lender, right? So that's when we talk about is lending costs, right? And there's a lot that goes into it. It's just not, somebody, it's not, the digital platforms cost a ton of money.
Mm-hmm.
The automation, the intelligence that are, coming out, that stuff costs a lot of money. So that's why these fees have all gone up, right? And they, on top of it, '08 plays a lot of this into this as well, because before '08 there
Right.
wasn't as many safeguards.
No, there was not nearly the same amount of compliance. I'm doing my continuing education right now.
Right.
They didn't have any of that back in '08.
So all that factors into it. So the biggest thing that we wanted to get out there is just understanding how it works from a lending side, from the loan side, and
Right.
And what to expect. I fully expect that in the next, it could be as early as 6 months from now to 18 to 3 years. Who knows? We're going to be refinancing all these people that bought these homes in this period of time.
Yes.
It's just going to happen.
Yes.
Right?
Well, the rates won't stay up. The rates won't stay up like they are for forever.
No.
But everybody who was just kind of coasting are feeling the pinch right now.
Right. So on top of it, we want to say is if you have the need to purchase or the want to purchase, and if this is a primary residence, I mean, it's worth having the conversation 100%.
Especially if you rent.
Right.
Especially if you rent. I mean, it is 100% worth having a conversation just because interest rates are going up right now and home values are coming down a little bit right now. I mean,
You might trade $30,000-$40,000 on a home for a little higher rate that you're going to be able to refinance here in the future.
you're going to be able to do that, and you're going to be able to get into an asset. I mean, I've said this before. I know you've said it too. This is how you start building wealth.
Absolutely.
100%. So just because things have gone up a little bit, I mean, right now still we have home prices coming down. We have more inventory available. It makes sense.
Yes, we just had an agent on. We just talked about how important it is now you can think about it overnight.
Yes.
You can ask, you can have an inspection. You can ask sellers to pay closing. You can ask sellers.
Mm-hmm.
And agents can also do like a 2-1 buy down.
Yes,
they
2-1
can actually
buy downs
pay,
are coming back.
Let's just say the interest rate's at 6.75, and you do a 2-1 buy route. So the first year you can buy it 2 points down, and then the next year 1 point down. So you actually that first year you're paying 4.75%.
And then
right?
the next year's
5.75. And then soon, hopefully sooner than that, we are going to be refinancing those rates.
Right.
So
down
it's
to that
a win-win.
4.75.
So that point on whether it's $200,000 or $400,000 of money, that makes a big difference in your payment.
Yes.
Right?
Yes.
So we ask sellers to pay that. There's different ARM loan programs out there. I'm still not a huge proponent of it, but hey, if we can get a 7-year ARM, it's very likely that's going to be a lower rate than it was.
Right. Right. When interest rates are higher, ARMs aren't necessarily the devil. They should be looked at. And again, I'll say this too. There's no option ARMs anymore.
Right.
And that's what really got us in trouble.
I had an agent ask me the other day, isn't there interest only programs out there?
There are in the new non-QM sector.
Yeah.
But I mean that's going to be for that's for 5% of the population. That's not for everybody.
No,
by far.
No, and in fact, if you get that offered, you want to look into it, like really look into that.
And maybe even get a second opinion.
Right. 100%.
Yeah.
Well, I don't know if anybody's gonna have any questions or want to get into this further. I'd love to have these conversations with people, and I
Yeah.
want to know what everybody else is thinking out there. Because we hear all the time, agents and lenders, this is the perfect time to buy and this and that. Well, it is in certain circumstances. It's
Yeah.
absolutely 100%. So we want to talk to these people, right, and make sure that we all know what is the best way to approach buying a home today,
Yes.
from offers to interest rates. How can we make it work? Down payment assistance programs. There's all kinds of different things that we can do for you, and that's what we're here for.
Yeah, that's what we're here for, and yeah, I think you just said it the best way you could. Cool.
All right. Well, like and subscribe. Contact us. Ask any
Absolutely.
questions you have. Would love to speak with you. We want to have these discussions every month.
Yeah, and if there's something specifically that you want to know more about, if you're on YouTube, leave us a comment.
For sure.
If it pops up and we say, oh, that's really interesting, we'll talk about it. So, yeah, awesome.
All right. Thank you all.
Thanks all.